Without further ado, I think probably best if we push on. We've got various presentations today of what appear to be quite a high caliber topic. There will be time for questions at the end, so if you have any, please let us know. I'd like now to introduce Louisa Winnik of Integer Research. Louisa is a senior analyst working with Integer. She's the editor for the Wire and Cable Data Service and has worked the Range Consultancy project, including a report for the International Cable Federation. Louisa has a BA in Geography and an MA in Public Policy from King's College in London. Please welcome to the stage, Louisa.
Good morning. So I'm here this morning discussing the specialty cable market. Special pleasure for me to be able to speak today on International Women's Day. It would be lovely for me to look back at this market and see more women in it in the future. We'll see. So this is the report that I have been working on probably for the last 18 months or so. So most of the information that I will be presenting today is from our specialty power cable report that we released back in September. So hopefully I'll be able to give you a kind of a brief insight into this market this morning. So I will be looking at the global trends in the market, looking at the key market drivers and particularly how we started to discover which were the most important market drivers. And then look at the prospects for the specialty cable market here in the Middle East. To start with the big picture here to begin with, this is looking at total specialty power cable demand on a global scale. So we covered 6 industrial sectors for this report. We looked at shipboard, renewables, so wind and solar power, offshore oil and gas, rolling stock, mining and aerospace. So this isn't necessarily a kind of complete coverage of what you would see as the specialty power cable market. We know that there are other areas, robotics, nuclear, that we're not covering. But we felt these were the biggest markets and certainly the ones that we had the most feedback on from our clients. So what we're showing is that we are expecting a bit of a dip in the market this year and then more of a recovery through our 5-year forecast. However, the picture is really very different when we look at each industry in turn. So I'm going to show you the data a little bit differently. So what I have here is an index showing demand growth for each sector from 2008. So we can see the very different trajectories for each industry. And I'll just take you through each one of those. So start with renewables. As I said, this is for solar, PV, and for wind turbines. And we've seen that it's grown from a relatively small base. We've had a lot of growth since 2008, and we expect that trajectory to continue. The vast majority of the current demand is in the US and in China, and both governments there still have big plans to continue to expand that. However, the low energy prices that we've seen over the last couple of years means that this is a big sector that's growing all over the world. What we have found, though, is that expansion almost always requires public backing or just public engagement, and that's meaning that it's tending to move at a little bit slower pace than we might expect. So a lot of the projects that we're seeing talked about now, we're not expecting the cable demand to come in until probably past the end of our forecast period. So in complete contrast, really, the trend for offshore oil and gas cable has been weakening, and we do think that things are going to get worse for this sector before they start to get better. We've already talked a little bit over the last couple of days about the low oil prices, so I don't want to dwell on that too much. The main thing is that the offshore oil and gas projects are the most high risk. They require the highest capital investment. And so as a result, they've often been the first things by many oil companies to postpone or delay or even cancel. So we're not expecting much improvement in this market until after 2018. And what we've found in particular is that the worst hit regions are those that have traditionally been the strongest. So we've seen demand fall most in the North Sea, in the Gulf of Mexico as well, whereas areas with investment off the coast of Africa, so Angola and Nigeria, for example, have been faring a little bit better in comparison. The other industry that has struggled over the last couple of years has been mining. We had this massive boom in the sector from the 2000s, pushed mainly by the growth in China. So it grew very, very quickly to become a world leader in the sector. And what we've seen since 2012 is this sudden hit of global overcapacity. And this has caused the industry to struggle. So we've seen a lot of shutdowns in the last couple of years, and particularly so in China, where partly because the government is making big plans to try and curb environmental pollution, so a lot of mines are shutting on that basis. They're also trying to stop illegal mining as well, so that is affecting the market quite significantly. And what we've come to see is an industry that is yet to adapt to this period of lower growth. And we do think it's got a bit further to fall this year before things start to improve. There are a number of sectors that we still see that are oversupplied in this area. Saying that, the recovery for cable is looking a little bit better. As this market starts to improve, what we're also expecting to see is an increase in the intensity of use of cable, particularly when we're looking at specialty cable. This is mainly because we're seeing an increase in the safety standards that are going ahead. So lots of areas that might have used, let's say, more normal cables in this sector are now having to reach higher specifications. They're using more specialty products and higher value specialty products as well. And we're also seeing an increase in the use of mechanisation in a lot of mines, and this is seeing greater use of cable demand as well. It's a much more mixed picture for shipboard. The line here is probably looks a little bit flat compared to what we're really seeing in the market, partly because this is covering both merchant shipboard and the military shipboard market. The vast majority of shipboard cable is consumed with the three big builders, so that's in China, in Japan, and in Korea as well. So those three countries cover about 90% of the gross tonnage of merchant ships that are built. And what we've seen in the last couple of years is those three countries struggle a lot. There is an enormous amount of surplus yard capacity that we've seen over the last couple of years, mainly as the global economy has started to slow down. The new orders have started to fall. And what that's meant is that those industries have really taken a step back. We saw in Korea in 2015 the big three builders, Hyundai Heavy Industries, Samsung Heavy Industries, and Daewoo all reported losses in 2015. So this is a market that has really struggled. Whereas in complete contrast in Europe, where the focus has been traditionally more on shipbuilding for military and also for luxury cruise ships, demand is actually looking quite positive. There are more orders for cruise ships that we've seen in the last couple of years, and certainly a lot of plans for more orders in our forecast period. And so this means that we're seeing renewed demand for cable in yards in Italy, in Germany, in France, and to some extent in Finland as well. And part of this is being driven by the higher standards again, the higher demands that's required for cruise ships, where these systems are expected to be able to return to port even if their current system fails. So this is often meaning that double the amount of cable is having to go into these vessels than was previously. So I'll finish looking at these two final sectors, so both in transport. Both have pretty strong and stable trajectories going forward, and this is partly supported by the planned investment that's in China. Certainly that's going to be a big aspect of demand in the next 5 years. But we're also seeing the rise of more mega projects, and that's going to add new demand towards the end of our forecast. So very large rail projects that are going ahead, especially in Asia. Very big project in Singapore, the metro there, but also big public rail investments in India, in Korea, and in Thailand too. And as we were talking about yesterday, in the GCC with the Riyadh Metro, Doha Metro, and also Etihad Rail are also going to be sizable projects, a lot of which the demand is going to come right at the end or after the end of our forecast. So move to talk about the key drivers and also looking about how we approach this as part of the report. So each industry that we looked at is measured by very different factors. A large part of the research that we did was trying to identify those factors. So me and my colleagues in the London office looked a lot at what was going on in Europe and in North America. And we also worked with our colleagues in Japan and Korea and China to look at what was happening there. And partly it was identifying which factors were the most important and then looking at where cable demand came in as part of that supply chain. So what I'm showing here is the measures that are used to determine demand for each industry. So some of these, it was quite a simple counting exercise. We looked at how many ships there were, how many trains there were, how many planes there were. And then at others, we looked more closely at what investment was happening. So how much investment was going into for the cost of mines, how much investment into oil and gas exploration. And then we took this next step where we looked at where cable fitted in. And often this was at more than one stage in the supply chain. So specialty cable would be used when producing a wind turbine, and then there would be more specialty cable used, probably in a different country where it's then installed. So it's about looking at what point in the chain that cable was consumed. So I'm just going to go through one example to kind of show you how we approach this and looking at offshore oil and gas. So we focused in on offshore oil and gas cable that related primarily to the standard, the NEK 606, so originally a Norwegian standard that's used a lot now across the offshore oil and gas market. And so this means that the cable needs to be flexible, it needs to be oil resistant, mud resistant, and so on. So these cables are used in oil drilling on either fixed platforms or jack-up rigs, and then they're also used in movable vessels for exploration, so FPSOs as well. So this is showing our steps to cable demand. So we looked at two parts of the market separately. So first we looked at these fixed rigs, and that meant that we could start to begin with by counting those rigs, looking at where they were located, looking at how that changed over time. And then the investment that was associated in each of those regions. So we might find that where there's a lot of new rigs, where there's no established industry, there will be a lot more investment, and that would often mean a lot more cable as well. And then for FPSOs, we put together a list of all the vessels that are used in the industry. So that was identifying first where the hull was produced, so the main part of the ship that would then have specialty cable in. And then, more importantly, where that ship was then converted, so where the top side was put in, the extra equipment that was then required to make it suitable for the oil and gas sector. So this kind of gave us an idea of the size of the market, and we could add to that the repair and maintenance demand. So if rigs are established and they're around for a long time, how much more cable would be required, how much cable had to be required on a regular basis in order to maintain those rigs. So this gave us our view on total spend, and from that we were able to make assumptions about how much electrical install was part of that spend, and then as a result how much was actually cable demand, so taking out labour, taking out other factors. And that gave us our total number. That gave us our historical view, I guess, 2008 up to 2015. We were able to kind of do all that counting and look at it like that. But the more important thing was then looking forward and saying, well, how is this going to change in the future? And identifying which factors we had to account for, which was the most important looking forward. So for oil and gas, clearly the oil price is a really important factor. We've seen that as the price improves, generally we then start to see more investment. And then as a result, we would expect cable demand to follow. What we were trying to identify, though, most was where that price has the most impact. So what areas this price affects most. And one of the things that we did find was that for FPSOs, they were the most likely to be affected by hikes or drops in oil price. So where things started to get better, it was much quicker to be able to bring an FPSO and to start drilling. So there would be higher demand for cable for those. And similarly, when the oil price dropped, they would be the quickest to leave the market as well. We also found that certain rig counts in some regions fell more. So this here is looking at rig counts in each region. And we saw that when the oil price fell this time, the drop was by far the highest in the US and the rest of the Americas. So that was something for us to kind of take into account when looking forward. And speaking to a lot of key players in the industry, this really allowed us to see where the cuts in investment were most likely to fall, and as a result have the biggest impact on wiring cable demand. So I've told you about how we've kind of been about that research, and hopefully now I'm going to try and give you a snapshot into what this looks like in the market in the Middle East. So again, this is the chart we're looking at covering all those 6 global sectors. And we can see that the Middle East and Africa does make up a very small share of this global market. Currently, these industries, making planes, making trains, making ships, are much bigger elsewhere. It's not a big focus for the region at present, and that's the biggest factor at the moment. So we look at the splits on a country level. There are a couple of players that have modest-sized markets at the moment. In Morocco, there is a big wiring harness industry, so there's quite a high level of cable demand for aerospace there. So a lot of the planes that are built elsewhere in Europe bring in wiring harness from Morocco. In South Africa, there's reasonably high demand for mining cable, but most of what we're seeing in this region is for offshore oil and gas. So that's the vast majority of demand for this part of the world, mostly in those projects offshore in Angola and Nigeria, for example. So it's a region that it is quite small at present, but it's one that has a lot of potential that has not yet been realised. So I can show you here the outlook for the 3 largest markets in the GCC. So Saudi Arabia, UAE and Qatar, and this is split again by industry. So they are relatively modest at the moment, but you can see that there is more to come, and certainly we think there's more growth outside this forecast. So I'd already mentioned those rail projects that are starting to go ahead, and renewables, it has a really strong trajectory going forward. From an almost non-existent market, I think in the whole of the Middle East and Africa, there was 1 gigawatt of solar PV demand in 2008. And so this has expanded fairly dramatically in the last 5 years. And with the low oil prices again, this has really given the impetus for this to continue to grow as well. The largest installations of solar PV at the moment are in Algeria and in Morocco. But obviously we're again talking yesterday about the potential for the UAE for the big projects that are happening there, and so we would expect an expansion in cable demand up to 2030 here. As the overall cable demand remains relatively modest, it's, I guess, perhaps unsurprising that the production is also really quite a small factor in this market, in this region. There are a small number of players that are producing specialty power cable, and most of those are producing it for the oil and gas sector. However, as we start to see these expansions, we start to see more bigger and more important rail projects, bigger solar projects, we would expect a number of players here to start to diversify, to start to expand those businesses too. So specialty cable is a growing market globally. The increases in specifications, the there's going to be higher intensity of use for this type of cable. And particularly what we're seeing is specialty cables start to expand out of what have been really traditional areas. So we've seen it really focused in Europe, really focused in North America, whereas that's starting to change. So mining cable is probably the best example of where most places now are using specialty cable, they're reaching the required specifications. So this is a market that is still yet to grow. Each industry, however, has grown in very, very different ways. So it's difficult to draw parallels between the growth in each of these. And it feels particularly odd because there are so many qualities that are similar when we look at it from a production side. So many of these cables have to be flexible, they have to be oil resistant, water resistant. And so we're seeing different, particularly in America, we're seeing a mixed use of these cables across different industries. You might find that the same cables used in the oil sector are now just being picked up and used in solar. So the qualities of the cables are very similar, but the growth in each market in terms of demand has been really different. And then for this region, it is small at the moment, but we do think that it's a sector that has really big potential, and particularly, as I say, because those standards are going to come in and make a big impact as these sectors start to take off, start to grow. Thank you.